Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 10th, 2017. Trading day has just kicked off. We're a little less than an hour into trading. It is 10:21 Eastern Time as I start this video. Wanted to do a brief overview of the broad markets. I had an inquiry in the trading room from member Gaucho. He asked for an update on IWM. So I'll go ahead and do that. And my reply was I haven't updated IWM because there haven't been many developments recently in the small caps. So I'll get to that in a second. But before I do, let me start with the large caps here. We're only going to look at the 60-minute time frames. I did a comprehensive overview of the broad markets on various time frames earlier this week in video format. You can check that out. That had the weekly charts, daily. So what I'm watching at this point, my focus is on the 60-minute charts. Here's the SPY, same story I've talked about before, a series of divergent highs. And again, as I often state, for those of you that might be frustrated, I know I've been leaning towards the bearish side, or at least stating that the risk reward is unfavorable. But as I've mentioned, every one of these divergent highs has resulted in a correction. So there's no reason to think that this one won't. It is not guaranteed, but as I said, to just kind of pull a number, I don't have statistics on how many confirmed divergent highs play out, but I would say it's well above the 80% number, 80 close to 90%. And again, by confirmed divergence, I need to see this PPO or the MACD crossover there, make a bearish crossover and turn back down. That will confirm that divergent high. And I think the next correction will be because of the distance now to the bottom of this wedge, although it's possible maybe we just pull back there, hit this trend line. I should clarify when I talk about the wedge, I'm referring to this uptrend line here and really this. So here's a big bearish rising wedge. But again, based on the scope of these divergences, these are what I call consecutive divergences. They've, the PPO is and the MACD, if you use that, very similar, have been making a series of lower highs all along. So this is really one large divergence in itself from back here at this point. And so therefore, based on the scope of these divergences, I'm not looking for a little, 1, 2, 3% blip. I feel highly confident that that we're looking at a pretty good pullback here. And when it comes, it's hard to say, but most likely that will be on a break of this downtrend line. I'm sorry, this uptrend line right here. That would be the increase the odds. But most importantly, and I mentioned this recently, we had a breakdown on the QQQ, but we didn't have that breakdown on the SPY. At the time the Qs broke down, the SPY found support on this trend line. So as I say, I never trade the indexes, or any one index, I should say, in a vacuum. In other words, I currently have a short position. It's not an official position on the site. I have a short on the small caps. Slightly profitable. It's just really gone mostly sideways and now for a while. But point being, I won't have any interest in getting aggressively short the broad markets or adding those as official short trades until both the SPY and the QQQ, those two main indexes, those are the ones I watch. There's other indexes out there. I don't really follow the Dow. It's only 30 stocks. It doesn't mean too much to me. I like to watch the S&P 500, the QQQ as far as large caps go. And then I'll keep it on the mid caps, MDY is the ETF, and the small caps, IWM. But so the sell signals would be a break of this uptrend line. Early signs would be confirmation of the divergence with a bearish crossover down here on the PPO and or the MACD. You can see that the RSI is at overbought levels. See overbought here. The red line is overbought. That's the 70 level overbought here. And look how that overbought coincided with these divergent highs. We were overbought back here. We didn't have much of a correction, but we did have a correction. We did drop from there, and we were overbought here, as you can see, and we were even more overbought, led to a pretty decent correction. So these are the things we're looking at, guys. It's the evidence is stacking up right now. We have long-standing, powerful divergences. We even have a smaller divergent high right here. It's drawn out with that white line underneath from this peak in the PPO and the RSI and the histogram that I have down here, trend indicator. So everything's there in the charts. All we need now is prices to move lower and then to take out that downtrend line. Moving on, I don't want to just see that happen on the SPY. Now, The Qs is a little bit different. We had that breakdown, as I mentioned. This was pointed out at the time, and it was also pointed out that the SPY had yet to break down. So we had a break of this trend line, but we caught, this is pretty significant support right here, about 123.88. Pretty decent support right now. So that's another level that's going to have to be taken out for a bigger move down. So essentially from that breakdown, we snap back up and have back tested underneath, and we're really right at the apex of this rising wedge. You can see that now. And this is also a divergent high, very important to note. From this peak here, you can see a peak in the PPO and a much lower peak. Looks like the PPO is now turning down. Lower peak in the RSI. So in other words, you have negative divergence in place, and a lot like the SPY, this is a much more powerful divergence. If you take it from this point back here, we have a series of lower lows on the price and momentum indicators and oscillators, and higher highs and prices. One other thing, let's clear this out. We can redraw this trend line here. Let me just add another one. We have a minor downtrend line right here. I'm sorry, uptrend line. So this is a level to watch. And, I'm going to go ahead and set a price alert right now on that because I think that's worth noting. If that breaks down, that may trigger a move back down to this 123.88-ish level. And you can see these are the targets. I haven't moved them yet, but we have a swing target down here. This would really technically at this point be your first target, since we've moved up quite a bit since I added the price targets. That's about a 2.6% drop from current levels. T1, T3 would be this uptrend line, and see this would come in together now, so that's really one target, if you will. What I mean by that is if and when the markets broke down, by the time it gets there, this uptrend line and this horizontal support level there will likely come in together, and we'll just have to take it from there. So right now, that's really all I'm looking for, and I do favor in the coming weeks a move down to that level. But again, we do not have the sell signals, so you can't, if you want to take a starter position, that's fine. But to jump the gun now, this has been a very powerful, relentless uptrend. Yes, we've had little pullbacks. If you're a quick trader and you're trading, some of the leveraged ETFs, or a large position on the Qs, IWM. My position right now is in TF, which is the E-minis for the Nasdaq, or I'm sorry, for the Russell 2000 for the small caps. So you don't have to have a big move to make. It's leveraged so much you can make a pretty decent amount of money, even if the the small caps drop 0.5% or 1%. All right, let's move on to those. We'll take a look. So there's the common theme, and most importantly, what I'm watching there are these large caps, because I think they will determine the fate of the IWM, of the small caps. Story on the small caps, that's my reply to Gaucho, was I haven't updated it on the front page recently, and I don't think I even talked about it in the video, because if you look at this, we've been in a sideways trading range now for months. This goes back to early December. Very well defined, very tight, almost an uncanny. It's very unusual to see such a tight, bounded sideways trading range last for that long in an index like this, and that's the story. So this one, ultimately will either break and run to the upside or break and run to the downside. Now we could have a whipsaw signal either way. We're close to the top of the range now. And again, the important thing is where the large caps go, because I think if we get those confirmed breakdowns on the QQQ and the SPY, if that happened right after the small caps break out here, that breakout's likely to fail. So again, this is what I like to do. Keep these three on my radar: the SPY, the QQQ, and IWM, and make sure they all three confirm a breakdown. If one of the three breaks down, especially if you're looking to short the market right now, the odds of a whipsaw signal are quite high. So you want to see all those go, and that's what we're looking at. What else do I see when I look at this chart? Any new high? If right now we're at a slightly higher high, so we technically have potential divergence in place. But let me draw it out for you here. Let's just say we push up a little more. So I'm giving a little room here. for these indicators to move up. But as you can see, this peak is quite a bit higher than where we are now. So if we happen to pop up a little bit, like I said, maybe a little fake out scenario, or right up to that resistance zone, this is your previous reaction high. If we get up into that resistance zone and then reverse, that will give us negative divergence. And therefore, we would have negative divergence on all of the major indices right now on the 60-minute time frame. And that's what I'm focused on. All right, so that's the broad markets. Let's go ahead and move on to a couple other things, and we'll wrap this up. I won't do an extensive update on gold. Because I've covered it recently quite a bit on both static post and in video form. Here's a rising wedge pattern which has since broken down. This was a key level I was watching, 117.32. Gold managed to briefly take it out, but that breakout has failed. So this is a false breakout, and right now we're back testing that level from below. You can see that resistance is defined. There's a series of reactions back here that define that level. And so now we have, if you will, two levels of overhead resistance, because former support once broken becomes resistance. So we have this 117.32 area, and give or take, it doesn't have to be exactly that number, but right around there, as well as this wedge. So we could push up just a hair, maybe back test the wedge from below right here, and then move lower. We still have that negative divergence. So I do favor another thrust down in gold and the metals. Not strong enough conviction to put it as an official trade idea. I do have a small position on a GDX short. Let's go ahead and look at GDX, but anything's possible. It all depends on, like I said, other variables, including the U.S. dollar. If there's a correction in the market, sometimes you get a flight to safety bid in gold, but at other times I've seen gold sell off with equity. So it's really, a lot of these relationships, they do have their temporary disconnects where they don't work. So just follow the charts for what they are. And right now, this again is what's given me pause, and the reason that I recently, in the last couple of weeks, booked profits on my longs and the miners, and now have a small short position. This is GDX. You can see back here, previous reaction high. Let's highlight that so you can see where this resistance zone comes from. This is what I'm looking at here. We have reactions here. There might even be some to the left of this chart. This is a 60-minute chart. So far, that's where we failed. You can see clear negative divergence right here, from a lower peak in the just about every indicator and oscillator, whether you use stochastics, money flows. There's a lot of different things you can put on there. These are just some of the ones that I'm watching. So this is what we're looking at. Here's a couple trend lines. I had this uptrend line, which I think is valid. We broke down, back tested it, went above it. We've had reactions off it. But more important right now, since we've had a couple breaks under it, is this trend line here. So that's where it found support once we broke down. And, gold stocks are kind of hard to say. Right now, they're just trying to figure out the next direction in gold. They're not really selling off much. There's been a little bit of pullback off those highs, but I think the big number right here, 24.23, that would be a pretty bearish level to be taken out. Reason being, it would take out this smaller uptrend line that I talked about here, and it is pretty well defined price support. If you look at the reactions here, there's a big gap back here and some other reactions. So that would certainly open up the case for a move down. There's additional resistance levels, and if things get really ugly, again, I mentioned this in the other videos, this is where I would be looking to position long. I see a pretty decent level of support running all through here, this support zone. So any pullback there, if and when we get there and I'm still short, I will almost certainly be covering the shorts and possibly going long. But again, we have to see what the charts look like, what the indicators, what the price action. I'll look at the daily charts. A lot goes into my analysis, more than just one time frame. We're looking at the hourly chart now, but I'll look at all the other time periods. All right. A couple other things I've been watching lately. Well, for months now, I've been talking about the semis. I have a lot of inquiries within the trading room Same story, series of divergent highs. And again, as I said, every divergent high that we've had has played out for a correction. So it's not as if these divergent highs, divergences don't work anymore. It's just which one will crack this primary uptrend line. This is what we need to take out. So these have been small divergent highs along the way, which really result, at least from this point, a series of much larger, much more powerful divergent high all the way back here. So here's a very well-defined bearish rising wedge pattern, and we have a divergent high again. There's not any room. If this divergent high plays out for a correction, it will almost certainly take us below, break down this wedge right here. There's also pretty decent horizontal support right there. You see this line here, a couple reactions there, and then boom, the uptrend line or the bottom of the wedge. So here's your flash point, if you will, I think, for the semiconductor stocks. A breakdown there. There's our first support level. Each of these horizontal lines are support levels, or you probably get a little reaction. These arrowheads are maybe a little big to draw for this. And, you know, where we go, again, there's a lot of factors that go into play, what the broad market's doing, how the individual semis look. But I think this is ready to pop any day now, and that's SMH. I can tell you there's one other alternative uptrend line I can draw. You see this little reaction where we had this overshoot there. You could draw a slightly more tighter uptrend line that comes into prices here. Let's color it something that stands out. So there it is. If you really zoom into the chart, you can see what I was doing is capturing the bottom of this candle right here. There was a brief overshoot, and so that could trigger the selling right there, and we're right on that uptrend line now. You know, there's the other ETFs as well. There's SOXX, which tracks the SOX Philly Semiconductor Index. There's a rising wedge, smaller rising wedge, but here's your primary uptrend line, and then there's XSD. They're all ready to go. Rising wedges, confirmed with divergence, and they're getting closer and closer to the apex, especially on SMH, the first one that I covered. That one was right towards the apex of the wedge. So if it's going to break, it's going to break sooner than later. What else? I've had a couple alerts go off today. Adobe is technically, it's not a semiconductor, it's more of a software company. I had an alert and I set a little shallow. It just tagged that trend line, but there's one looks like it's ready to pop. We took a shot at this one earlier in the year. I can't remember if I made it an official trade idea or unofficial, but there's a trade idea for you. This one looks ready to break down. The other alert that I had one set that went off this morning shortly after the open, UBNT. I had this bearish rising wedge pattern with an alert set here. Now, I didn't take it because it gapped down well below it, but you can see this is what happens to rising wedges. And I expect the same thing to happen in a lot of these semiconductors. This stock is now down 15%. It was down a lot more. It's recovered about, I'd say, a third or so of its losses already. So this thing was probably down 20% or so at the lows. Came right down towards my first target area. But this is what can happen. And this is why you know, I think it's dangerous to be long certain stocks like these semis. We just may have one morning where you get a lot of these alerts start popping left and right with stocks breaking down and gapping, making large gaps below those patterns. And you can see the divergence was very well defined on that rising wedge pattern. And my guess is that's earnings induced, or at least some news. But as I often say, that when you have a large gap due to earnings, whether it's a bullish gap to the upside or a bearish gap to the downside, more often than not, now that doesn't mean always, but more often than not, if there's a clearly bearish or a clearly bullish chart pattern leading into earnings, the gap is going to go that way. So this one obviously gap to the downside and had a clear bearish rising wedge pattern. So just an example of what I'm watching and some of the things out there. And a couple more and I'll wrap it up. This is a sort of a all-inclusive video. As you guys know, where I see favorable risk reward, I keep talking about unfavorable risk reward in the broad market, even though the trend is bullish right now. I still like the grains, particularly wheat. Wheat's one of my favorites, so it's worked out well. It's moved up, hit our first target. Now we've hit the second target. Second price target has now been hit. That was at 738. We're trading at 743 right now, which is that the actual resistance level that targets on is 742. Remember, I set my price targets just shy of the actual resistance to avoid missing a fill. And you can see how the stock is, or this, ETN, I should say, has acted. Came up and that's resistance. So it's going to maybe struggle here. We already came close once, so I wouldn't be surprised to see wheat power up on through there with very little and possibly no reaction because we came so close to tagging it before. But we'll see. Either way, this is still the final target now, but I will very likely, if the charts continue to look constructive, I will make this potential fourth target an official target, at least on the long-term trade. Remember, this one, wheat is both a swing trade and a long-term trade on the site. A long-term trade is comparable, if you will, to an investment or a trade that's going to last, expected to last 6 months or more, maybe a year or more. So wheat looks good, as does the grain ETF, JJG. If you want to hedge your bets a little, spread it around, not put all your assets in one single grain, such as wheat, then you buy JJG and you have corn and some other things in there. And same story, it's moving up nice. Would break out. This was a resistance level. This was a second one. We hit that second resistance level, had a little pullback, and we've now powered through it, which opens the door for a move up to this next target zone. And finally, I'll leave it on DBA if you want to spread it even a little bit more within the ag sector. Here's the PowerShares DB Agricultural Fund ETF, and looks good. But I said, of all the ag commodities right now, I'm leaning towards the grains. Is my favorite at this time. But you can see this was a nice, clean, bullish falling wedge with positive divergences down below. Breakout, pulled back to support, was powered back up, and so DBA, your next buy signal, if you will, would be a move over the previous reaction high, and that would open a door for a move to any or all of these targets. Okay, that's all I wanted to cover in this video. And again, those are the things I'm watching for: the levels on the broad market, the levels on gold, GDX. Semiconductors, which I still think at some point soon will present a very nice trading up on the short side, and of course, long ideas. I'm looking, guys. I know right now the trade ideas have been skewed a little more to the short side. It just has to do with risk reward. I know the trend is up, but I'm not a trend chaser. If I thought the trend was healthy and well intact, then I'd be looking for some more longs. However, like I said, there's just too many red flags right now, and the risk reward is just not worth it. Again, and I'm speaking generally on the broad markets. There's always individual stocks that stand out. In those, I'll try to find some more of those trade ideas. Okay, guys, have a great weekend, and I'll follow up with anything else I see today with some static charts.